Okay, so now that we have an understanding of how the insurance models work, we can talk about the problems with the solutions that are being proposed.
The public option.
The public option has morphed into several different forms over the past few months, and new jargon has had to be introduced in order to cover those new differences. There's the trigger option, there's the reverse trigger option, the robust option, and the weak option. Knowing what we know now about insurance models, it should be no surprise that the more robust, or to put it another way, the more socialist one of the public options is, the more people it can cover and the less it costs. The option that was in HR 3962 was the weak option. But it doesn't really matter. No matter which public option you're talking about though, they're all so limited in scope that they're pretty much meaningless. Democrats are saying that the public option is supposed to provide competition for the private insurance companies. That's simply bullshit. The public option was never meant to be competitive. In fact, it was designed specifically to be non-competitive. If you have health insurance right now, you're not going to be eligible for the public option. If your employer provides health insurance that you've refused because the coverage is too weak and the premiums are too high, you're now going to be forced to take it by law. The only people qualifying for the public option are the poor saps like me who couldn't afford to buy insurance to begin with. So let me put this another way. This is the existing number of people in the insurance market. These are people whose dollars the insurance companies are competing for. And these people are the people who don't have insurance. This circle is 60 million people who are uninsured because they can't afford it, and their employers don't offer anything. This second group of people has never counted in the eyes of the private insurance companies because they weren't able to join this market. And private insurance companies have never had to compete for their dollars, because they're poor. They would have been able to afford for premium payments would have been so low that the risk of paying out claims, which is the same for everybody regardless of income, outweighs the profits of taking their money. If this group is suddenly covered by the public option, they're still not going to be able to afford to purchase private health insurance, and they're never going to join the private health insurance market. So they still won't have their dollars competed for by the private health insurance companies. They don't have any dollars to compete for. If this first group of people can't get covered by the public option, then essentially nothing changes. The folks who were fortunate enough to afford health insurance before are now stuck with whatever provider they have and can't move their premiums to the non-profit government-run option. There's simply no competition going on here. The only way that insurance companies would be forced to compete for anybody's dollars at this point is if those who currently have health insurance are able to withhold their funds from the insurance marketplace until the price falls, which is highly unlikely. However, they're not even going to have that option. The health insurance industry has been supporting reform. Why? Well, health insurance companies the nation over have been jacking up rates in preparation for the mandate.
The mandate.